So if you have any questions, make sure you ask them. And I'm going to turn it over to you.
All right.
Thank you.
All right. Good morning, everybody.
Good morning.
We're here to talk about flood, and it's a really exciting subject. No, I'll tell you my story. I live in a house that's in a flood zone, and I asked the real estate agent. I said, "Has the water ever been in the swimming pool?" And she said, "Oh, never." I'm not sure if that's like she could get in trouble for that now because it actually goes into the swimming pool all the time. And so I'm glad I got that information that way because I would have been scared otherwise. But now that I kind of understand what's going on with the floods, it kind of helps. Thankfully, we don't have the flood risk here that the rest of the country has. Our flood risk here, for the most part, is slow, and we have lots of warning. It's not what we're seeing in the news that happens in Texas, where you have 45 minutes because that just doesn't happen. That is possible, I guess, if a tsunami were to happen, right? But it is not likely to experience. You can have that in Richmond, you can have that in Roanoke, but you cannot have that type of dangerous flash flooding here. Yes, the roads can flood and don't drive through high water, but we don't get the raging water. We get a very slow rising water that can be very damaging. So we're here to talk about flood insurance and what it means, and I thought, well, since we're talking flood, we'll talk about the big flood, right? So that will be just our icebreaker there. The joke was earlier if Noah had insurance, certainly had assurance, but anywho, I'm not in the flood zone, which is what we often hear everyone say. Oh, I'm not in the flood zone, and I often say, then why are you trusting the government for your determination of what isn't a flood zone? They've only done historical maps, and the reality is that floods happen all the time in areas where they're not in a flood zone. Everyone is in a flood zone. It's kind of the reason for the first map. The tops of mountains have seashells on the tops of them, so everyone is ultimately in a flood zone. It's just at what point in history will that water impact you? But so everyone's in a flood zone. And the reason why we're in a flood zone, because even when you're on the top of a mountain, you can flood. And that we'll see that here. What is a flood? A general and temporary condition of a partial or complete inundation of 2 or more acres. So this is important because if someone wrecks their vehicle and hits the fire hydrant in front of your house, and the water sprays directly at your home for 6 hours until they can cut it off, and your home is the only home that's flooded, and there's not more than 2 acres, there's not been a flood. You flooded, but they didn't flood. And so we have to have 2 or more acres of normally dry area of 2 or more properties, right? And it could be an overflow of inland or an unusual and rapid accumulation or runoff of surface or a mud flow. And I want to point out the mud flow because when you're at the top of a hill and the hill gives way from a mud flow, that's where you would be covered, right, with flood insurance. And that's the reason why the guy at the top of the mountain needs flood insurance as well. So this is a picture of a flood situation, and this is more flash flooding that we don't deal with in our area, right? It's washed out the dirt. Now, here's the problem with this, just a little caveat to flood insurance. The only thing flood insurance is protecting is the structure. You've got to get all that dirt back in there, which will probably be more expensive than the structure, right? So this is another example. This is an old picture from Norfolk. You can see the HRT, but this is typically what we deal with. Now, what was unique about Norfolk, and what is unique about Norfolk as an old city? What did they do? They dug out the streets and put the dirt and built the houses on top of the dirt so that the houses are higher, right? What did we do in Virginia Beach? Made it all level, right? And so when the street floods, everybody floods. And you can go to Windsor Oaks or any of that. But a great example of the type of flooding that we have, all floodwaters are extremely dangerous, right? Because they've picked up all of the pesticides, all of the animal feces, all of the oil, and most likely that's coming into your home. And generally speaking, whenever anything anything has touched floodwaters, especially if it's something that you are living on or you're eating off of, if it gets into your pots, your pans, all that has to be thrown away. It cannot be salvaged in a flood. Unlike if your house catches on fire, they'll send in the appropriate people and scrub all the stuff down and they'll clean it to restore it. If floodwaters has touched your pot, it must go in the garbage. All right. So this is a historical picture of downtown Norfolk. Because Norfolk floods, Norfolk is nothing. Most of Norfolk, especially MacArthur Mall and towards the water, that's all fill in. If you know anything about Norfolk's history, most of everything around the city of Norfolk is filled in. There was a time 150 years ago that the sand dunes that we see in North Carolina, that everyone's so excited about, to go down there and, you know, take an airplane off and practice, those same sand dunes went all the way to Hampton 200 years ago, right? And so where did all the sand go? It built Norfolk Naval Station, right? So they took all that sand and they filled in Norfolk Naval Station and downtown Norfolk. Otherwise, we had those massive sand dunes all the way here. And think of how cool that would be if they still wrapped all the way around. You'll see some of them left if you go on to Fort Story, right? But those sand dunes went all the way down through Sandbridge, all the way down through the Outer Banks. So these, without getting too technical, these are the things we want to talk about. EC is elevation certificate. Everyone should have a copy of 2 elevation certificates. We're going to study that in a second. BFE is base flood elevation. Firm is a flood insurance rate map. Building or structure is a walled and roof structure that's principally above ground and affixed to a permanent site. So that kind of means we're going to have a problem getting flood insurance on a trailer, right? Because it's not affixed. Contents, all belongings inside of the structure. We say in insurance, if you pick up the house and dump it upside down, everything that falls out is personal property. Things which are attached to the home are not. All right. And then rating 2.0 is an actuarial rating for your address. And that's where you're hearing who has heard that elevation certificates are no longer needed, right? That's rating 2.0, but that doesn't mean that you don't necessarily want one. So, important coverage information. If you're in a preferred rate policy, which means that the federal government believes that you have a 1% chance or lower in 100 years of flooding, then you can get a PRP. And these are backed up by the National Flood Insurance Program. Is there private flood? There absolutely is. Private flood is available. Some mortgage lenders won't allow you to have private flood because that company has to really show that they've got deep pockets. The reason why the federal government insures flood for the most part and private companies do not is because of the excessive amount of damage that floods can cause. And some private companies can't sustain that. The government just prints more money, right? And so they just make it. Okay. But if you bought a national flood insurance program policy that's a preferred rate, it's about $1.50 a day. And for all of us in this room, our most valuable asset is our home. But yet we're not insuring against the number one peril in Hampton Roads. Peril is what could happen. The number one peril in Hampton Roads where the least people are insured for it. So Hampton Roads outside of New Orleans is the highest category, especially Norfolk, for flood, but it has the least amount of people insured against it. So $250,000 on your structure, $100,000 on your contents, cost you $1.50 a day. All flood insurance must be paid in full. All flood insurance, once it's paid in full, it cannot be canceled except for a very select reason, couple of reasons. It's a great policy for my agency to sell because once you buy it, you can't cancel it. We have chargebacks in my agency that if someone buys a policy and cancels it, we get a chargeback. Well, we enjoy the idea that we wouldn't, once we sell it, it's there. For that reason, there is grandfathering of flood rates. There's all kinds of things. So if your customer or if your client has a flood policy, when you get the right people on the phone, that flood policy can be transferred to a new owner. And sometimes that's important because you may have a seller who has a flood policy that's $700 a year because it's grandfathered. But under the new rating, it's $1,500 a year, right? $1,500 a year. We can transfer the $800 policy to the buyer. And they get the $800, not the $1,500, which means now they can buy more house.
Is that every flood insurance?
All NFIP policies can be transferred.
And my other question is, so you're saying Norfolk is number 2 behind New Orleans? Is Norfolk under a flood? I mean, are they all flood properties?
Not all of Norfolk is a flood risk. It's just how much of the infrastructure is at risk, which is how you get to that rating. All of Norfolk's infrastructure is in the flood. So in the event that we have a catastrophic category 1, 2, 3 hurricane that breaches the seawalls, Norfolk City will be in deep trouble because all of their infrastructure is exposed.
Gotcha.
Yep. Okay. So understanding the BFE. The BFE is the base flood elevation. So every community, which most of the communities in Hampton Roads participate with the National Flood Insurance Program. And what they've done is they built the building and they have agreed to build these houses in accordance to what the NFIP says you should, according to the firm, the flood insurance rate map. If you choose to do your own thing, if you want to build your house at the BFE, meaning that the water is going to reach the second floor of the home, which is really the living floor, because the first floor is the crawl space. If you want to build your house at the BFE, it's going to cost you $1,400 a year on average in premium. If you want to go 3 feet above, it costs you $427, and if you want to build below it, it'll cost you $10,000. If you want flood insurance. Problem is you can't get a mortgage without flood insurance. All right. So that's the difference of why the BFE matters. And the BFE doesn't change. That's the base flood elevation. That only changes in the event that you're going to systematically change the elevation, right? Which we're seeing some of that happen in Norfolk, which I'm going to show you some slides on that. Norfolk has a pretty big project that I've talked about in some of the monthly meetings, Resilient Norfolk, that's absolutely going to change the BFE, all right? So this just kind of gives you an idea of the different flood zones. All right, this guy decided to build below the BFE. This guy decided to build above the BFE. You can go down the Sand Bridge. All right, everybody's up above the BFE, right?
Mhm.
They don't put the air conditioner on the roof because they want to. They put the air conditioner on the roof because they have to, right? Because any machinery or equipment or any portion of the dwelling that's below the BFE, you get a higher rate. So that's why everything's way up in the air. And so that's the reason why stuff's on stilts. You can see the BFE here as it comes in, and these are just the different flood risks. Obviously, the flood risk which are at the Virginia Beach oceanfront and the flood risk which are in Sandbridge are totally different. Those are wave action floods. Those aren't the floods that we're talking about in most of the other areas. This is a whole nother world. And this guy has to have flood insurance even though he's 20 feet above the BFE. Because it's not how high your house is, it's where your house is on the map, right? I own a condo that's right there. If you know where Water's Edge Church is, there's a little canal there that connects Timberlake to Windsor Lake, which connects it to Mount Trashmore. The condo's on the second floor, but it's next to the canal. The condo will never flood, but I have to have flood insurance. Because it doesn't matter if I'm in the towers. What are the towers at the ocean front? The Mayflower, is that what they're called? Or did they rename them? If you're buying that, of course those are like apartments and stuff, I don't know if you can buy.
Yeah.
But if you were to buy that, I don't care if you're on the 40th floor, you have to have flood insurance, which is some of our stupidity. But so that stupidity is what's in the rules for flood insurance. It's the same stupidity of the people that say, well, you're not in a flood zone, so I don't need flood insurance, right? And if we have any questions, just stop me. Pre-firm, post-firm. December 31st, 1974, the federal government enacted firm, flood insurance rate map. And we used to have pre-firm and post-firm. And so, but now it's all kind of the same. You don't have to have an elevation certificate. So you used to, if it was post-firm, meaning the home was built after December 31st, 1974, you had to have an elevation certificate. You don't have to have one now. It's optional. It may or may not help the customer, right? The customer has the right to choose EC or no EC, but they also get rating 2.0. And again, rating 2.0 from our keywords a couple moments ago, rating 2.0 is where FEMA has done an individual identification of your property, and they're doing a flood risk assessment and trying to give you an actuarial rating for your home. Now they're miles away from even possibly being accurate, which is the reason why an elevation certificate may help even more because it would give them real numbers. Now, if the elevation certificate hurts the customer, then we go back to rating 2.0. We only use the elevation certificate if it helps. The problem is an elevation certificate is $30 or $300 to $400 to get. The good news is once an elevation certificate's done on a property, it's good forever.
Is that the survey company?
Survey company, yeah.
But
Yes,
who do you go to for getting the rating? Like, we call the survey company for the elevation certificate, but for the rating 2.0, who would?
insurance agents.
Okay, and do
Yeah.
you have to pay for that?
The rate?
The rating 2.0, like,
No, that's just what it's called.
okay,
That's just, so instead of pre-firm, post-firm, they now call it rating 2.0.
so the insurance company would go out and tell you based on, but you don't pay for that.
That's correct. We would be able to generate a flood rate within a few minutes.
Okay, yeah.
Yes,
What is the usual turnaround time for getting an elevation certificate from ordering to actually receiving?
probably a couple weeks. You gotta get the engineer out there, because I mean, I'm gonna show you I'm gonna put these elevation certificates to life. I mean, there's a lot of measurements, a lot of measurements.
And we did one for a family and it took 3 to 4 weeks till they could get someone out there.
But what's important is if the house was built in the 80s, 90s, or 2000s, there's an elevation certificate somewhere.
Right.
It doesn't matter. You can, as long as one's been done. And so I'll have it in my notes later, but I'll go ahead and say it. If you know that flood is part of it, the house that I bought, I requested as part of a condition of the offer that I wanted a copy of their flood policy and their elevation certificate.
Would the city have a copy of that?
They will not, which is crazy because the same house can be elevation certificated over and over and over. And the engineers are like, you call the same one, they're like, don't have a copy, but we're glad to come out, right? I mean, the same properties are over and over. It should just be on file.
Right.
Yes. All right. Exactly. So this kind of gives you pre-firm construction and post-firm. So pre-firm, this was before the federal government got involved and said we got to do something about flood. So if you built your house 10 feet below the BFE before the federal government gave a map, it's $555 a year. Right? So I always remember some of the old houses in Sanders that sat on the ground. Those are pre-firm homes. Their flood insurance is not as high as it is for the guy who decided to build after that and be on the ground, because he's going to pay a lot more because he chose to break the rules, right? And so, and we can't change that. Well, this is a deal breaker if this all of a sudden shows up, and this is why there's a rise of private flood insurance, and there are companies that sell private flood. The problem is if you're at this much of a risk, you're insuring your most valuable asset. There are real concerns about insurance companies that cannot pay their share of claims when catastrophe hits. All right, so now let's talk about flood vents, because I have gone round and round with people over flood vents. So flood vents are designed, morning, you'll just give her one of those, each of those copies. So with flood vents, if you think of a house, let's say you have a 1,500 square foot home and it's on a crawl space. If I have a 1,500 square foot first floor ranch that's on a crawl, that means I have 1,500 square feet of crawl. I have to have 1,500 square inches of venting. So remember length times width. If a flood vent is 10 by 10, I have 100 square inches. That means I need 15 holes in the side of the house, or it's not properly vented. Because my square inches must equal my square feet. And why people build homes in Hampton Roads that are not properly vented, I don't know. I can't tell you how many people I've had to talk to. You're going to have to poke holes in your house. And people get all angry. I don't know what to say. The square inches is this, and it has to be within so many, this is called the grade, right? The dirt. It has to be within so many inches off the ground, or it's not a legal flood vent. Because the idea of a flood vent is to allow the water to come in and go back out. right? And so it's very important. We call this properly vented, right? And if a home is not properly vented, then what has to happen, you agree this is where you live, the first floor? But for flood insurance, this is the first floor. That's the second floor. If you want me to rate from the second floor, the first floor has to be properly vented.
Why do we want the water to get there?
Because if not, it will take the structure away.
You don't want it to push up against, you want
Yeah.
it to go underneath.
Yeah. And so, but again, we're applying the basis of most floods, which is raging water. In Hampton Roads, our water comes up slow and it goes down slow. So our flood venting, but we still have to follow the rules. We don't have the problem. But when the water can flow through the house, it doesn't take the structure away.
I mean, it's less resistant.
Yes, yes. Okay, so this is an impact on home closing. This is a real home closing that we did with one of our real estate partners a few years ago. This is 79 Shannon Avenue, built in 1930, which means it is pre-firm. So it's sitting on the ground. Customer states she didn't even realize flood insurance was a concern. Here's her issue. We're trying to offer auto, home, and flood in one setting. She's got a high debt income ratio. What do you think flood insurance will do to the deal? It's gonna kill it. And I don't want to get into all the contract stuff, but if you didn't have flood as a contingency, and my God, it looks like you got to buy a house. I mean, you don't get to say, well, I didn't know flood insurance could be $1,000 a month, right? So here is the house. This is the Elizabeth River. Here's the house. It's because of this little creek here that puts that in the flood zone, right? So the pre-firm rate, $3,196 a year, or a $10,000 deductible. If she can't qualify for a loan because her debt to income is so bad that a $200, $300 flood, she don't have $10,000. This is where we get into the moral issue, which we're okay with. We can do it. We just need to make sure the customer. You're screaming, the loan officer's screaming, give her the $2,000 policy so I can get this deal done. We're saying when she has a loss, she'll never have the $10,000 for the, right? You following me? But if we need to sell the 2,000 to get the deal done, and but these are the real issues that come up, right? So you can see here that we have the subgrade crawl space, the living space, the adjacent grade, the bottom floor. Well, I'm going to put some numbers on here for you. So look at your paper for Channing Avenue. Look at your paper for Channing Avenue. And what is C2A? C2A, so Channing Avenue, what is C2A?
Building elevations based on.
Top of bottom.
Yep, so what is the number that's in C2A? 6.44. So that's going to be the little dirt here. What's in C2F?
744.
Right, so I'm gonna put these on here. You can now, so what's the BFE on there? Base flood elevation, anyone see the BFE?
No.
Hey, it's up in the upper box. Yeah, it's box B9. Right, so let's understand what we're looking at here. We have a BFE of 8 feet. I'm not sure which number, what's 9.66? 9.66 is C2B. 9.68. That's the top of the next high floor, which is her living floor. So her house, where she lives, is 1.66 feet above the base flood elevation, which when it does flood, that's what FEMA is predicting will be the base. So she's 1.66 feet above the BFE. Well, I just showed you a map or a drawing a few moments ago that in order to get the really good rate, we got to be 2 or 3 feet above the BFE. So she's kind of right at the BFE. Okay. Now, how many square inches on that sheet? How many square inches? I'm gonna grab one over here. How many square inches do you see? So you're going to see that in it's up at the top. A8A. How many square inches is or square feet is the crawl space?
14.
1424. How many openings does she have? A, C,
Zero.
0.
Well,
Is she properly vented?
No.
No, which means that when we give the rate, I have to give her the rate that's 7.44, which is now below the BFE, because her house is not properly vented. Does that make sense? So even though it didn't look like it, that house is on a little bit of a crawl, because the guy that built it in 1930 knew what he was doing, right? He built the house above the BFE. Now, they probably didn't have a BFE in 1930, but the guy's like, well, my grandma says the water gets that high on that tree stump. So then he says, well, I'm gonna build the house above that tree stump. That tree stump's long gone, but the house is high enough in Portsmouth. Okay. So this is why it matters. When we left from the pre-firm and she paid $300 to get an elevation certificate, the rate fell to 826 from 3196 because she had an elevation certificate. If she wants to poke holes in the side of her house, we could get it down to 762.
So even in the living area,
No, just in the crawl.
I was gonna say, if there's no room in the crawl to do that.
Yeah, then it can't be properly vented, and so it is tough. I mean, we're talking about, we can see that the enclosure is 1,424 square feet. That means I need 1,424 square inches. If that's 10 by 10, I need 14 holes all the way around the house. And it's not enough to put them all on the front. There's engineering. So if I put them on the front, I got to put them on the back. If I put them on the side, because the water's got to go in, right? And so these are real conversations that we have to have with customers. And I'm not suggesting you have the conversations, but you'll have an eye and say, flood stuff looks, well, if it qualifies for rating 2.0 and we can just give them a good rate, it doesn't matter. It's when we get into the weeds and we get into a mess and it's like $3,000 or $4,000. Are you gonna?
Yeah, what if it's on a slab? And
If
there's
it's
no
on a
cross-
slab, then it is what it is. There is no crawl space venting. And if they built a slab below the BFE, you better hope it's pre-firm. If it's post-firm, you're going to pay out the nose for it. Again, they built us. So again, to make sure we really drill down post-firm and pre-firm, 1973. The federal government told you on January 1st, 1974, do not build in this area at this level. And if a developer still did it, then that person who owns that home is going to pay out the nose for flood insurance premiums because they went against what the government said. The government's not going to subsidize flood insurance after this period because we made it very clear what needed to happen.
You have to jack your house up.
You do have to jack
Jack
it.
One Haven Colony.
Yes, you do. Yeah,
That's the only cure-all.
that is the only cure-all.
Very expensive.
Right. Okay, so does everyone understand that so let's look at, bottom line, we need to talk to the customer, right? Someone says, will you just give me a flood rate? Well, there's a lot of questions. And by the time we play telephone and I tell you got to poke holes in the side of the foundation and you go say, yeah, you got to poke holes in the foundation. We never hear from them again because you labeled us crazy. And then if you call another insurance agent who's going to sell them an NFIP policy and they don't have that conversation, they're 100% getting the wrong policy. And here's what's unique about the National Flood Insurance Program. At Geico, if I rate your policy incorrectly and you have an accident, we pay the claim and we fix the rate. For flood insurance, if you've paid the wrong rate and you have a claim, they backdate all of the corrections to the life of the policy. And then after you pay all your premiums, because you were on the wrong rate because your insurance agent did it wrong, you pay all the premiums back, then we'll settle.
Wow.
Even if it's your agent's fault.
Yes, and so just like you all have errors and omissions, we have errors and omissions.
So why wouldn't they back that up?
Well, they could, but in the meantime, you're without a house while my errors and omissions company says, well, sue us.
Yeah.
It's just a disaster, right? Okay, so this was another closing that we did. You don't have the elevation certificate for this one. This is in Hampton, obviously near Buckrow Beach. You can see there's a flood risk from all kinds of places, right? And really what I just want to point out here is the BFE is 9. The second floor is 9.82. The attached garage is 7.3. It's normal for attached garages to be below the BFE. What decides whether we use the rate for the second floor above the BFE, the first floor below the BFE? What matters?
The age.
The age will help, but what is the big deal?
Living.
Flood vents. Flood vents. Let's assume this is a 2,000 square foot home. That means I need 2,000 square inches. I have to go out to houses with my ruler, or Candace does, and we're measuring flood vents sometimes. And I have to do a properly vented worksheet and I have to certify that I saw the vents. All right. So pre-firm rate was not available. This house was built in 1975. All day long, he's paying $1,500. The correct rate was $499. Because we got the customer on the phone, my homeowner's policy was actually a couple $100 more expensive. But once I got them on the phone and realized that their agent was quoting it wrong because it actually was properly vented, they were rating it from the first floor, not the second floor. Our flood was $499. And that's a huge difference, right? Another house. The threat is water from the Elizabeth River. So look at your here. What's the BFE on the Peace Haven Drive property? What's the BFE? 8.1. Sounds familiar that the BFE in Hampton Roads is around 8, right? Now, what was weird is when I first saw a flood certificate for like Colorado, because the BFE is like 3,300 feet. And it's like, "Oh, that sounds weird, but because you live on a river in Colorado, right? So, what's the you see the flood vents on this place? They look kind of big. Yeah. Okay. So, what's this little line right here? That's the top of the crawl or the bottom of the first floor. All right. And then this is the grade. And then we don't know what the grade is under the house because it goes up, down, and that's what, right? The yard over here may be a little higher. So looking at these, you can see that the BFE is 8.1. The highest adjacent grade is 5.4. Second floor, 8.82. First floor, 5.1. Right? Well, if I rate it for the first floor, that means I am below the BFE. And that rate's going to be super high, right? You built a house post-firm under the BFE, you're going to pay out the nose, right? Right? This is during a flooding event at this property. Just by an example.
This property.
Yeah. The pool is excluded. The pool is excluded. There is no coverage. The furniture is excluded. And this is the reason why I bring all this up, because flood insurance is the one insurance policy that in the event that you have a claim, the purpose of insurance is to indemnify you. Our house burned down when I was a little kid. My mom didn't have renter's insurance. But the purpose of insurance would have been to return her to a place financially. The truth is, if your house burns down to the ground, financially, I'm not talking about mentally, financially, you're in the best place you've ever been in your life, because every single thing when they rebuild that house is brand new and all the contents are under warranty. It's the best thing financially, right? Flood insurance, if you have a flooding event, it don't matter if you have insurance, you're going to be jacked up. Even though it's going to help you, but it's going to be a disaster. For example, in this flooding event, if that shed's damaged, then you have to use 10% of your building coverage to fix that. The pool's excluded, the furniture's excluded, the dock's excluded. On homeowners insurance, we don't exclude all that stuff, but we don't cover flood, right? Remember? Rising water is never covered on an insurance policy except through an endorsement. Falling water is always covered. Water that falls, that hits the ground, that begins to rise, it's a changing water, right? There are two types of rising waters that impact your home: sewer and water backup, and flood. Flood can be added. We sell a product. We're one of the only companies in Hampton Roads that sells HomeSite. Some of you have heard of HomeSite. HomeSite allows us to endorse the policy and add a flood protection. That's private flood. And it works. And it's so much cheaper than NFIP flood, right? And I can also add an endorsement for water and sewer backup. And water and sewer backup is when you flush the commode and the water goes back and then comes in reverse. Overflowing commodes are not covered by your homeowner's insurance policy. No way, no how. It's not covered unless you have an endorsement. So on the way out, you live in a second floor home and you flush the commode, you're running out, your kids flush the commode, run out for vacation. The thing is stuck in the down position. The water's running, comes out of the toilet bowl and overflows. There is no protection on your homeowner's insurance policy without the endorsement water and sewer backup. Right. I have had some of our customers, one of my customers over the years come back from vacation after 7 days and there's water running out of the front of their door. The house is shot, guys. And without that endorsement, that's a couple $100 a year. And what often happens, I got to get this house sold. And so what we do is we strip down coverages, which we can do to get it sold, and then after the fact go back and add them. But we got to be able to be close enough to talk enough to have that conversation, because a strip down, here is the rate to get you to closing, but this needs to be the rate the day after closing. Does that make sense? All right. So this is inside the home, and you can see the BFE, and we got a problem because the boiler and machinery is below the BFE. And that's all a problem. And then in addition to that, it's a garage. Anyone see anything unique about the garage walls? They're finished. Then FEMA says you must live there. Why do you have drywall on a garage wall? You must live there. And because of that, the home must be rated from a 5.23, not an 8.1, regardless of how much venting, because your garage is finished. I have talked to folks who have bought a home
Unfinished the garage.
and I only bought this house, Greg, because the garage, which was attached, was closed up. You know, the 1976 home that has the sunken garage that they closed up and it's in a flood zone and they put drywall on it. Well, the garage is now below the BFE, and we don't rate the garage below the BFE in the house. Everything gets rated below the BFE. Well, I only bought this house because the garage was finished. Well, you're going to have to tear out the sheetrock and you got to return this to a non-living space. Well, I don't want to do that. I'll just go find someone to sell me flood insurance that doesn't know the story. That's fine. When there's a claim and they come in and the adjuster sees drywall on the wall, he's going to check how the policy was rated and say, you've had this policy for 18 years. It's $1,400 more in premium a year. You owe us 18 times 1,400. Now let's talk about your claim. Does that make sense?
Yeah.
Okay. So here is not an option. Old policy 949, got it down to 888 with a little bit of manipulating, but that's a real rate. Right? And it's not bad, even though it is just right below the BFE. All right. But it kind of gives you an idea. So Norfolk, Wavy TV10 says Norfolk is second only to New Orleans for the risk from coastal storms. And there's a $2.6 billion storm risk management project that is going to do what it can to protect Norfolk. It's called Resilient Norfolk. And I'm bringing this up because it's really interesting what's going to happen. So this is the city of Norfolk, and these are all the different zones. In S, so remember I was talking about all the sand dunes? That's where all the sand dunes went, right? You know, it's not natural for the coastline to be like perfectly straight on the riverside, right? On the ocean side, it makes sense, but not on the riverside. That's all sand dunes. Cranny Island, all sand dunes, right? All of downtown Norfolk, the number one, that used to be all marsh, and they filled it in, right? So, what is going on in downtown Norfolk to protect against flood? The non-structural areas, if you own property in the non-structural areas, the city of Norfolk is offering money, and it's coming soon, to raise those homes at the cost the city of Norfolk will pay the cost. Each home has been allocated $1 million to raise the home. And you can read all about this at resilientnorfolk.com. In 1, 2, 3, and 4. 4 is the Broad Lake area. 3 is the Lafayette. one is downtown Norfolk, and then two is Pretty Lake. So let's now zoom in. What they're going to do is in the NS areas, they're going to raise structures. In 1, 2, 3, and 4, they're going to build a series of levees and seawalls. Okay. So this is phase 1 for downtown Norfolk. They're going to build a wall. All that's Harbor Park. Harbor Park is not in scope. That's right over here. All right. But it's basically Harbor Park, Amtrak, not out. All of this for the area of downtown Norfolk. They're rebuilding all of the seawall. And if you've ever been down there close to where Waterside is over to the right, they have those steps. Those are not steps. That's a flood wall. It's the reason why it kind of, I mean, that's what it's going to be. You're going to build a 13-mile flood wall all the way around downtown Norfolk, right? Now, if you've ever been to the Wisconsin and you stand at the gates of the Wisconsin, there's a door there. They'll pull that door shut. So in the event that we have nuisance tidal flooding, so you'll see where on the news, they always show you the little graphic. You're like, well, it don't matter to me. Whenever you see that we get into minor tidal flooding, the picture that I showed you of the house with all the water, that is moderate tidal flooding. That's not major tidal flooding. Whenever we have moderate, minor to right at the top of minor and moderate, the city of Norfolk closes all of the floodgates downtown, and they turn on the pumping stations. And Nauticus is closed. Everything is knocked out, and that's what they're doing. They're building a bigger wall, right? They're going to build a wall right through here. It's right over here. That's the Hague for Ghent. They're going to build a wall across there. So when the water wants to come into Ghent, it's not coming into Ghent. They're going to build a wall, and they'll pull the wall shut during a flood event. Okay, so again, Lafayette, Pretty Lake, Broad Creek. Let's look at Pretty Lake. The pink there, they're going to build a wall across Pretty Lake, which will stop all flooding in Ocean View. It can come from the ocean side, it can come from the bay side, but it's not going to come up through Pretty Lake. All right. Broad Creek. You know Broad Creek because you're going down 264 heading towards downtown Norfolk, and you go over the bridge and light rails right on your left. Right. That's Broad Creek. Underneath that bridge, they're building a massive wall to keep all of the water from going in there, right? And then the Lafayette, I'm going to show you a Google image where all the piers are. You all have done some of the cruises out with the harbor cruises. If you go out this way, that's where that massive body of water is in the blue cranes. They're going to build a wall all the way across the Lafayette to keep this entire area from flooding. Right? That water's got to go somewhere, which one would think that the BFE on the Elizabeth River is going to change, right? Because water has to be displaced somewhere. So looking really in, this is the Google Earth image. So this is 264, Elizabeth River, but Broad Creek, a wall across there. And it'd be open most of the time, but they'll pull it shut when we know that floods are coming.
Really good information.
Right? Lafayette.
Good. Yeah, this is amazing.
The Lafayette. You've been out there, there's a little white house when you all do the harbor cruises. You see the little white house out in the middle of the river? Anyone know what the White House is? I'll tell you what the White House is in a second. A massive seawall all the way across here that they'll just pull it shut. So that all these homes is, when there's a storm surge that comes in, it's just going to go on up the river. It's not going to come in here, right? The little white house that's right out here, that's like the beginning of it. Yeah, you all seen the little white house out in the middle, and you're like, what is that? That is the East Coast Degaussing Station. It's one of the only ones in the country and one of the few in the world. As you remember when we were in elementary school, that we rubbed magnets around each other, or we rubbed metal against each other, and it became magnetized. As ships go around the world, north, south, north, south, north, south, north, south, they become magnetized. And what's the danger of a magnetized ship? It could pull other ships to it. Or worse, what did the Nazis do? All around the world. They put mines in the oceans. And there are old defunct mines at the bottom of the oceans that could be sucked up. So this little white house out there is the East Coast Degaussing Station. And from the aircraft carriers to the cruise ships, they go into the degaussing station. and the divers go down and they demagnetize the hole. That's worthless, okay? Oh.
We know information like that and share it with our clients, they look at us like we are in.
Yeah, you're like, hey, that's a,
So
yes.
that's nothing.
Yeah.
It's trivia night.
So involve your customer. There's no reason to run from a flood risk. Ask for the elevation certificate as part of the initial offer. It again, you may want to just get a rate 2.0. Listen, we don't have a problem ballparking the rate and giving you an idea of what it is, but we probably gotta have the customer. I mean, it's really tough. We start playing telephone. We just need to talk to them. Ask for a copy of the current flood policy. A part of that will give you a lot of information. It'll tell you what's going on. Ask the neighbor how high the water's ever been. Don't quote a ballpark home or flood insurance. Allow the experts to do what they do, right? We're not going to tell you how to close a house. Probably stay out of the homeowners and flood side of it, right? Why my agency? I'm here, knowledgeable agents. We're a reputable company. We write through Wright Flood and we write through Assurant Flood, but Wright Flood is the largest writer of flood insurance. Obviously, you'll like us, we're preferred. It's the same price no matter where you go for flood insurance. Every single person, whether it's Evertree or whether it's Goosehead, unless they're doing private, we have some private options, but private scares me for my most valuable asset. In the event of a catastrophe. You say, well, what type of catastrophe? Understand that most risks are not insured by the same insurance company. So let's think about the World Trade Tower, right? Those buildings, a company said, I'll insure them. And you understand that when a company said, I'll insure the World Trade Center, they actually went to 30 different insurance companies. And you get floors 1 through 10, you get floors 10 through 20, you get floors 20 through 30. And there was like 50 insurance companies on the World Trade Center. And that's called reinsurance. And you just keep going and get more reinsurance and you reinsure it. No one prepared for the day that the World Trade Centers were not there. The only reinsurance company that paid their share of the claim was Berkshire Hathaway. Because they were the only ones that could afford the loss. Because it was billions of, and no one thought the building would go away. So no one collected a premium for that. Berkshire Hathaway, which is the parent company of Geico, which is obviously Warren Buffett, is the only insurance company that had the capital to make the claim by, right? In catastrophe situations, catastrophic, I don't want that flood insurance that's a couple $100 cheaper a year that may not even be able to pay the claim when I'm at my most dire point, right? Okay, so if you have no flood insurance, they'll bring you a FEMA trailer, low interest loans to rebuild, which means you already got a house note. Now you got another one. Now you got two, right? And possible complete financial devastation. It's already going to hurt if you have flood insurance. It's going to be really bad. What happened first? Does it really matter? This is an old slide of the deadly West Virginia floods that I grabbed years ago. But the house is on fire and it's flood. Anti-concurrent cause provision, a term in a first-party policy that indicates that a loss caused by a combination of covered and excluded causes of losses will not be covered. A policy that indicates that a loss caused by a combination of things, fire and flood, fire's covered, flood is not, you have no coverage.
Wow, crazy.
Okay, so if the flood is coming and I have no flood insurance, I can't just light it on fire and be.
No, yes, you could. But the difference is we know because when the house burned down to the water level, we knew it was already flooded.
Wow, what a scam.
What is it?
So there are, and I was reading up on this.
Fun, let it explode.
Yes. So
Don't video it going
Yeah.
down the river on fire like they did in West Virginia, by the way, which is where you got the picture.
yes.
Yeah, I was like, I'm not gonna video it, I'm just gonna turn the gas.
I'm from a little place called Covington, Virginia. It's like 10 miles away from you can smell West Virginia. All right. That's why I could put that up there because we're about West Virginia. I mean, it's, now, Virginia Supreme Court has ruled that they're not sure that anti-concurrent cause has really been settled in the state of Virginia. So it may very well be in your contract, but they're not sure which way it goes. Well, unless you have the money to fight it, right? Yes.
So, but this is only in relation to those additional coverages like the flood insurance, right? Because I've had someone once before, a renter of mine who had a tree limb break through their house, came through, hit water lines, house floods, and then sets their electrical stuff on fire.
That's totally different
Because
at-
it's not the,
because at a loss, we go back to what caused it.
okay,
And it wasn't the tree that caused it from insurance.
okay,
It's the peril of wind.
okay,
And since we covered wind set off the tree falling, which caused the water line to bust. Now, where the insured gets in trouble is he can't be like, hey, my water's leaking. He's got to turn it off.
Oh, well, now wait a minute. You're covering wind. If I have hurricane insurance, the hurricane caused the flood.
We specifically exclude.
it's a written specific
Right,
exclusion.
yeah,
and
but
not to
like-
say-
Yeah.
Nope, it's written in.
Yes.
What about
Because-
then the subject
every
of
single
fire
policy.
with that, cause like, how can you turn off the water if it caused an electrical fire that then caused the house to burn?
Yeah, so if the tree
Yeah.
fell on, which caused this series of things that there was a fire, right? And I do a homeowners thing too, which we could set up as well.
Yes,
We have to get into either whether it's named perils or open perils.
okay,
Okay. Named perils, so generally, we cover a homeowner's policy, there's HO2, HO3, HO4, HO6, and HO3 special. Right? And you don't know what you got. You probably should, because you're insuring your most valuable asset. Like, I just went with the cheapest, I called this company. Well, when there's a loss, it's really bad. So we have named perils and we have open perils. Named perils is what we call fire, wind, lightning, smoke, explosion. Those are the perils. If one of those things didn't happen, right, then we're out. Well, then you also have open perils that says we cover everything except those things we say we don't. Which one's the better policy? Everything except those things we don't. But if you have a named perils policy, wind, fire, hail, lightning, smoke, explosion, and you have a loss, you have to prove it was wind, hail, fire, lightning, explosion, smoke. If you have an open perils policy, the insurance company has to prove that it wasn't excluded. So when you have a loss, do you want to fight the insurance company to try to prove it, or do you want them to prove you wrong? This one, the burden of proof is on you. Some of you on your personal property in your home, your couch, your TV, your jewelry, you have a named perils policy, which means if you come home and your house is wiped out, we see those stories, right? Gone. Like someone backed up a U-Haul and took everything. That's mysterious disappearance. There's no evidence. We don't know what happened. If you have an open peril on your personal property, the insurance company has to prove that it wasn't an alien in the middle of the night. Otherwise, it's covered. If you have a named perils policy, you have to say it was one of these things. And so that's the reason why do we put open perils on jewelry? Because mysterious disappearance is covered. I don't have to prove why I lost it. I just have to tell you it's gone. And now I pay for it. Does that make sense? That's homeowners. So don't use this idea that if a house burns down and has a flood, there are some states, I don't know what I should have looked at North Carolina. Virginia, the Supreme Court of Virginia has had it tested and they did not rule on it. They just kind of said, we do not know what our position is. Right? Which means that the guy who was suing ran out of money and the court case stopped. Right? And so that's the danger of when you have two causes that are happening simultaneously. In your case, the wind blew the tree over. That's clear that happened first. But what happens if the wind blew over and knocked the tree down and the wires arced and they went up against the house? That's all wind. And then to your argument, well, wind is driven by water. We actually specifically exclude any form of rising water at any point. And remember that street that I showed you in Norfolk? Let's go back to this. Right here. You all agree there's manholes all the way down through here. And in the homeowners slides, I have this. the showers that have the drain in the floor. Right? We don't have basements in Hampton Roads for a reason. And the reason why we don't have basements, all these people's houses are built up here because they use gravity to push the sewage into the street underneath the road. Right? But the moment that that sewer starts stopping up in Norfolk, it comes out of the manhole cover. Right? In Virginia Beach, where everything's nice and smooth, everything looks nice and pristine. When the manhole's full and your drain in your house is lower than the manhole, your neighbor's dew comes in your shower. All right? And that's water sewer backup, and you have no coverage for raw sewage coming into your home without an endorsement on your homeowner's policy. Does that make sense? So, as we wrap this up, my agency is available. I'd love to have your referrals for homeowners insurance. We answer the phone 9 a.m. to 9 p.m. Monday through Saturday. I check my email relentlessly every 7 seconds. What's that? Cards. Candace, I have some. If you need to get in touch with me, it's easy to do so. Again, we're always answering the phone. And here's the deal. 40 to 50% of your customers are buying Geico homeowners insurance because they're calling the 1-800 number. It just doesn't say Geico because we write through all those different companies, right? And you don't want them to go through the 800 number because when something happens, they can't get the same person. I've got Liz, Mike, and Onita in my office. If you talk to Liz tomorrow, you're gonna talk to, or you talk to me. Yes.
Liz is fantastic. I work with her for all of my buyers. She shopped my homeowner's insurance around about 2 years ago. I think I was at like a $1,300 a year rate. And whoever I was with tried to slide an email in saying, my renewal rate was $3,600. I was like, what? So I called Liz and she was really having a hard time with it until she asked the questions that nobody else did. They had a water loss at my house. It was a water heater that leaked. It wasn't a sewer backup. It wasn't anything like that. I guess that's 2 different categories of water loss. So when nobody else could get me below $3,000, she got me at $1,700, which is half of what they were gonna raise it to. So she's the only one who asked. She was persistent. When I call, she picks up. She knows my phone number. She knows my name. She's A+ customer service. She's wonderful. She's good.
And she's worked for me for 10 years and she probably all in Geico experience, insurance experience, 20, 30 years. Between me and the 3 or 4 agents I have, we're talking about 130 years of insurance experience. We've seen it all. We've done it all. We've had some horrible losses. Horrible losses. The largest loss I've ever had in my agency. A guy had an invent put in, and he, first off, insurance companies don't like the 5 Ks or 5 Cs. We don't like candles. We don't like chimneys. We don't like children. We don't like cooking. These are the things that burn. All right. Canines. We don't like them. No, we don't like pit bulls. We don't like Rottweilers. We don't like Doberman Pinschers. We don't like any of them. Because the story I'm going to tell you, the guy has a brand new hip. He's going to see his brother. He's walking, carefully, and the dog runs out and jumps up on him, and he falls, and the hip comes out.
Sorry, I'm not laughing.
That's-
I'm uncomfortable.
All of a sudden, right? You're 100% responsible for what happened. There's 3 types of people you bring to your property: an invitee, a licensee, or a trespassee. Anyone that you invite to your property, you have a responsibility to protect them from any form of danger under any circumstance. If they're hurt, it's 100% your fault. A licensee is a meter reader, Cox Cable, guy that can knock on your door. You have a responsibility to warn them of danger. If you put a sign up that says beware a dog, you're also admitting that you're harboring a dog which is dangerous. You warned them, but you also are admitting that you have a dangerous dog. So you've done your part of warning them, but you also admitted that you knew your dog was dangerous. So that gets messy. And the last one is a trespassee. The courts have ruled you cannot trap them. They must be able to freely come in and freely go out. Now, they get shot in the middle of that. It's inside your house, right? But you can't trap them. They have to be able to come in, and lots and lots of cases on that. Well, this guy that fell with his hip, that's a $500,000 homeowner's claim. Oof. And you know what? I hope you like Fido, because now you're not gonna be able to get homeowners insurance. Right, I mean, it's over, right? An insurance company, if your house burns down to the ground and it was because of kids, candles, etc., you're probably not gonna be able to get homeowners insurance for a couple of years. You have to go through the state. Very, very expensive. Right. Was there a question somebody was gonna?
I didn't have a question with my hand raised for a question, but I do have a question.
Okay.
Can you have the NFIP and also the private flood endorsement at the same time? Can you have both?
No, you cannot.
Okay.
But what you can have, which is excess flood, which we sell excess flood. So you have these houses on the Elizabeth River that are $600,000 to $700,000. Right? So 250 is the maximum for the NFIP. Then you buy an additional policy for excess flood that covers the structure.
And then one more question.
Yes.
The example that you had with the garage, not being above BFE was because it had the drywall, they may not be covered. I've seen apartment complexes, they'll put like washing machines, dryers, they'll put water heaters on some form of block, which raise them higher in the garage area. So in that case, even though it has drywall, will they be covered in the event
So
of some type
they're
of-
covered. That would be a different type of policy because it's more of a commercial grade flood policy.
Okay.
But the reason why they've raised the machinery,
Yeah.
because if you look at this flood map, we didn't go into the detail, but you'll see that on one of these, it says on the back page, section D, I'm looking at the Peace Haven Drive one. C2E in the comments under D. C2E, lowest machinery service building is AC unit. And they're making comments about the fact that the AC unit could be below the VFC. So the reason why you see the washing machine and dryers on up is because they're trying to get it above the VFE.
Right. And then it will be covered in that regard.
It's still covered regardless, it's just whether or not you paid the right rate.
Okay.
Listen, you can keep your stuff below the VFE, but you owe us more money. You put it up on stilts to lower your rate.
So I know the last time that we talked about the resilient Norfolk, you had already answered this, but I'd like to say it again. So once this is done, it's like 2035. And so the you said this last time, but will you repeat about if we will be able to, what will it look like to have these ones that may have high insurance currently, and then their risk is reduced greatly due to these flood walls?
Yeah, so once they get the flood walls in, which the project was supposed to already have begun, and
Yeah.
it's delayed, surprise. China builds 20 bridges in 10 minutes, and we still talking about the bridge in Baltimore, right?
Yeah.
Should we put the stilts here or here?
Which is actually what slowed us down.
Yeah.
Because we were like next in line and then they jumped in front of us.
And it's just bonkers. There's a couple of different things. My house has been offered, and I'm one of the 3 on my block that says you're in phase 1, your house needs to be raised. And I'm like, well, if I raise it, my other 2 neighbors don't. Now I look like no one wants to. Why I gotta walk all the way up these steps, right? But once it's raised, I'm gonna get higher above the BFE. But why are they raising it? Because they're gonna change the BFE on. The BFE is gonna climb when they close up all these waterways. So the impact's gonna be as they raise these properties, as they raise these up, what is gonna do to the premiums. And so you may have a real low flood risk now, but there's grants right now. You see the homes all over Norfolk that have been raised, and you're like, what's going on? And a lot of times they'll put them a nice garage in there, right? But they can't live there. They can't create the space. What are they famous for in Sandbridge? That little space down below, they make it a living space.
Totally uninsured.
That is not allowed.
Yep.
And it's more than just not insured. The BFE, you should have been rated from down here, but they're rated from the top of the stilts. It's not allowed. Right? First thing that you have to do, so you want to live that life, as soon as you have a flood, you better get in there and rip out the sheetrock before the adjuster gets there. Right? So when this happens, 2025 or 2035, I guess, it's going to be a significant shift in Norfolk. But Virginia Beach and Chesapeake touch the Norfolk side of the river, and I haven't read anything about Virginia Beach and Chesapeake doing anything to offset the new water that's coming their way. Their tributaries are going to fill up. All right. And if you remember the big, huge expansion there at First Baptist Church, where they widened the interstate, the beautiful new that fixed all the issues with 264. So I'm coming from Chesapeake. and I want to go to Virginia Beach, and they got that beautiful, I go over here to Newtown, go over here to Wichita. When they did that, they moved the river. And all of those homes all along there were not in the flood zone, and they moved the river over 25 feet and put them all into a flood zone. And they all went under mandatory flood insurance. And so that river, the Elizabeth River, if you can think where I'm at on First Baptist, there are lakes that is where Topgolf is, and then where Gateway Church is, big lakes. Those lakes are operated underground into spillways under First Baptist, and they connect to the Elizabeth River. The Elizabeth River runs all the way up through the city of Virginia Beach, but they just cut it off long time ago. Does that make sense? And so the full impact of Resilient Norfolk and what it's going to do to flood insurance. I mean, the city engineers have been to our Civic League meetings like, it's not going to change a thing. It's not, nothing's going to, what do you mean it's not going to change? When you build a wall and say it's not going to come into the Lafayette, and you build a wall and say it's not coming into our beloved Ghent, and it's not coming into our beloved Broad Creek, it's going to be at Kemp's River Crossing in Virginia Beach, because Kemp's River Crossing is where the Elizabeth River ends. Right. So, I think it's important if you're looking at homes in Norfolk on the water, you probably should go to Resilient Norfolk's website. You can put in the address and you can kind of see if it's phase 1, phase 2, phase 3. I don't think it's any reason to not buy a home. The city's they're gonna give everybody $1 million to raise the home. It's ridiculous.
Do we have to use it to raise the home?
And for those who qualify, you have to actually, like, they'll send someone out and actually assess your home to see if you qualify.
It's up to, I think.
Yeah.
Up to,
And-
not.
Yeah, they're not ready.
You
They're
know what?
not like, you gotta
Yeah.
get enough, you gotta get
And
enough.
listen, and I don't want to get political with it, but really shouldn't what they just do is just put $1 million in escrow and say, Greg, when your house floods, we're not going to fix it. Here's $1 million and you need to walk. But instead, we're going to spend $1 million to raise it, and it may still flood. And then you'll think another $1 million, and like, I mean, it's bonkers. Any other flood questions, insurance questions? Yes.
No, this may seem like a silly question, but I come from the land of basements. So how does fully encapsulation work with your vents being able to need water to flow?
Well, if you've done the fully encapsulation, then you've encapsulated what the rafters that are holding
just
up the
the-
first floor.
Okay,
You couldn't fully encapsulate the inside.
okay.
So
I
they don't
understand.
encapsulate vents
No,
when they do that.
no. And if they do, now we have to rake from the dirt.
Beats the purpose.
Yeah.
In some areas, it's not always a good, I know the builder was like, gung ho, but some areas you don't want to fully encapsulate. Depending.
So on my, that number's a good number too. On my business card, you have our 838-5050. This phone number here, 695-3730.